Normally, a tax is just a static number, right? I mean, you find your bracket, you apply the rate, and you're pretty much done.
Right. It's usually a very fixed formula.
Yeah, exactly. But what if a tax rate was, alive? Like, what if it was designed to just quietly grow every single year, completely on its own?
So the government never has to actually ask for a legislative rate hike ever again.
Exactly. And that is exactly why we're here. Welcome to the deep dive. To you, our listener, and our future CPA, we are jumping into a legislative landscape that does exactly that.
It really is fascinating and, a bit intimidating for reviewees.
Oh, for sure. Today, we are looking at how the taxation of alcohol is structured to constantly outsmart the industry it regulates. So where are we pulling this from?
Well, we are focusing on sections 141 to 143 of the Philippine Tax Code, specifically as amended by Republic Act 11-1467.
Right, which is just prime real estate for the CPA board exam.
Oh, absolutely. For anyone preparing for the boards, this is a highly testable area. I mean, examiners love this topic because it forces you to navigate, mixed tax structures.
Conflicting timelines, too, right?
Yeah, and those automatic rate increases we mentioned. It really tests your ability to read the code critically and apply, multiple variables all at once.
So for the listener, the overarching theme you really need to grasp today is anti-manipulation.
Right, because taxpayers are always looking for workarounds.
Exactly. Every complicated rule, every strange definition in these sections exists because a taxpayer once found a loophole and the government had to, seal it shut.
It's a constant game of cat and mouse.
It really is. So to tackle this, we're going to break it down into the three main targets of alcohol excise tax. That's distilled spirits, wines, and fermented liquors.
Which perfectly aligns with sections 141, 142, and 143.
Right. We will analyze how the government captures different profit margins, how they enforce compliance, and the devastating financial penalties for trying to cheat the system.
Let's just dive right into section 141, which covers distilled spirits.
Okay, so this is your whiskey, your brandy, rum, gin, vodka, that sort of thing.
Exactly. And the legislature recognized that luxury spirits, they carry massive, highly variable profit margins.
Oh, yeah. I mean, a single bottle of, premium aged whiskey might sell for 20 times the price of just a standard local gin.
Right. So if the government only imposed a fixed peso tax per bottle,
They'd just leave a massive amount of potential revenue on the table.
exactly, from those luxury brands specifically. So they engineered a hybrid tax structure.
They're double whammy.
The double whammy, yes. You don't just calculate one tax, you actually have to compute an ad valorem tax of 22% based on the net retail price.
And then you have to add a specific tax, which is a flat peso amount per proof liter.
Right. But let's look at the first half of that trap, the net retail price, or NRP. The law explicitly states the NRP excludes the 12% value-added tax.
And it excludes the excise tax itself.
Yes. And the exam will absolutely test your mechanical application of that exclusion.
Wait, for a first-time reviewee, let's really break that down. Because examiners always try to trick candidates with gross versus net, right?
Oh, all the time.
Yeah.
If a computational problem gives you the gross shelf price of a bottle of rum, you cannot just multiply that by 22%.
You have to mathematically strip out the VAT first.
Strip out the VAT and the built-in excise tax to isolate the true net retail price before you apply that 22% ad valorem rate.
Okay, got it. But wait, if I'm like a massive liquor conglomerate, what is stopping me from simply selling my product to a wholly owned subsidiary at a massive loss?
Transfer pricing manipulation.
Yeah, like I could artificially shrink my tax base by reporting a ridiculously low selling price to the BIR, and then my subsidiary quietly marks it up for the actual consumer.
Well, the BIR anticipated that exact loophole, so they completely bypassed the manufacturer.
Oh, really?
The law dictates that the net retail price is determined by a biannual price survey. Revenue officers actually, under oath, physically go into at least 5 major supermarkets.
Major supermarkets in Metro Manila, right? Or whatever the relevant region is.
Exactly. And they record the actual price tags on the shelves.
Okay, but the code specifically mentions they only check major supermarkets. It explicitly excludes, retail outlets, kiosks, and sorry stores.
Which is a huge distractor on the exam.
Right. In a multiple choice theory question, asking what establishments are included in an NRP survey, sorry stores are going to be your distractor. But why is that? Because, a massive portion of alcohol in the Philippines is sold through those small neighborhood stores.
It comes down to standardization. Like, a major supermarket chain uses centralized, audited pricing software. The markup is uniform and trackable.
Ah, Whereas a neighborhood sorry store owner might just mark up a bottle of gin arbitrarily based on like what time of night it
But
is.
who's buying it? Exactly. The BIR cannot base a national tax policy on fluctuating, unregulated margins. They need that rigid baseline of a major supermarket.
Okay, so we have the ad valorem side figured out, 22% of that strictly defined NRP. The second half of this hybrid tax is the specific tax, right?
Right, which
That-
is a flat peso amount per proof liter.
And this brings up a massive blind spot for test takers because, honestly, the definition of a proof liter sounds like a chemistry lecture.
It really does.
The tax code defines proof spirits as liquor containing 1/2 of its volume of alcohol of a specific gravity of 0.7939 at 15 degrees centigrade.
You absolutely need to memorize that for the exam.
Yeah, I have that memorized, but I need an analogy. Like, why does temperature and specific gravity matter to a tax collector?
Well, we have to look at the physics of ethanol. Alcohol expands when it gets warm.
Okay.
Thermal expansion means the liquid physically takes up more space at higher temperatures.
Oh, wow. So a liter of gin sitting in a warehouse on a hot May afternoon in Manila physically occupies more volume than that exact same gin on a cold December morning in Baguio.
Exactly. And that thermal expansion is why the BIR needs an immutable standard. If they taxed purely by fluid volume without adjusting for temperature,
Manufacturers would just measure their vats in the dead of night.
yes, when the liquid contracts, minimizing their tax base. So by defining a proof liter at exactly 15 degrees Celsius with a specific gravity of 0.7939, the government locks in the exact mass of the alcohol.
They completely remove environmental temperature manipulation from the equation.
Right. They are taxing the actual amount of the intoxicating chemical, regardless of how much space it happens to take up that day.
That is brilliant. Okay, so the specific tax on that proof liter was set at 66 pesos for the year 2024. But this brings us to like the most dangerous trap in the entire topic,
The timelines.
the timelines. Starting January 1st, 2025, that specific tax for distilled spirits is put on an automatic escalator.
It increases by 6% every single year.
Right, because the legislature recognized that inflation constantly erodes the real value of flat taxes.
Exactly. Instead of engaging in a grueling political battle to pass a new tax reform law every 5 years, they just hard-coded inflation protection directly into the statute.
So in 2025, that 66 peso rate automatically compounds by 6%. In 2026, the new rate compounds by another 6%, and so on.
Ad infinitum.
Okay, so they trap spirits with a complex hybrid tax to capture those high variable margins. But when you shift to a product with totally different consumption patterns like wine,
Yeah.
that hybrid model falls apart
Right. Under Section 142, the government abandons the ad valorem tax completely.
because you need a different tool for a different market structure.
Exactly. For wines, the law utilizes a straightforward specific tax based purely on volume. When this amendment took effect in 2020, the base rate was set at a flat 50 pesos per liter.
But hold on, this is where examiners will really test your situational awareness. We just established that the 6% automatic escalator for distilled spirits activates in 2025.
Right.
But if you look closely at Section 142, wines activated their 6% escalator back in 2021.
Yes. This is a classic exam pitfall. You cannot take the 2025 escalator rule and blanket it across all alcohol products.
The timelines are totally isolated by section.
Exactly. So if an exam problem asks you to compute the excise tax on a liter of wine for the year 2023, you cannot simply use the 50 peso base rate.
You have to compound it.
Right. You must compound that 6% annual increase for 3 consecutive years from the 2020 baseline.
So you would take 50 pesos, multiply by 1.06 for 2021, multiply the result by 1.06 for 2022, and again by 1.06 for 2023.
The math is simple, but remembering which year triggers the escalator is where candidates lose crucial points.
Spirits escalate in 2025. Wines
Right.
have been escalating since 2021.
Got it. And, the administrative logistics also change drastically between the two products. Beyond the computation, examiners love testing filing deadlines.
Oh, the deadlines are always a trap.
Under Section 142, manufacturers and importers of wines are required to submit a sworn statement of their sales volume within the first 5 days of every single month.
Okay, let's compare that to distilled spirits under Section 141. For spirits, the manufacturer must file that sworn statement within the first 5 days of every third month.
Right. It's a quarterly requirement.
And in the pressure cooker of the board exam, it is incredibly easy to mix up a monthly filing requirement with a quarterly one.
But understanding the supply chain realities of these industries helps anchor those deadlines in your memory. Think about it. Distilled spirits like whiskey and rum require significant aging in wooden casks.
Right. The capital is tied up for years before the product is ever bottled.
Exactly. So the government provides a longer compliance runway, 3 months, to align with the slower inventory turnover of spirits.
Ah, whereas wine moves faster, so the BIR demands their data faster.
Yeah.
Every single month. It is all tied to the speed of the underlying business.
Exactly.
Okay, so we have covered the luxury margins of spirits and the specific volume tax of wines. This brings us to Section 143, fermented liquors.
This is the mass market. Beer, lager, ale, and porter.
The margins on beer are razor thin compared to spirits, but the volume's just astronomical.
Right. So to tax this effectively, the law, again, uses a specific tax per liter. However, the schedule here introduces a transitional mechanism.
I like to think of the tax schedule for fermented liquors as a staircase that eventually dumps you onto an escalator.
That's a great analogy.
Yeah, from 2020 to 2024, the tax rate walks up a very deliberate set of stairs. It was 35 pesos per liter in 2020, and it increased by exactly 2 pesos every single year.
So 37 in 2021, 39 in 2022, 41 in 2023, and reaching 43 pesos per liter in 2024.
Because the legislature wanted to provide a predictable, fixed runway for the brewing industry to adjust their pricing model.
Right. But just like distilled spirits, once that staircase ends on January 1st, 2025, fermented liquors step right onto that automatic escalator.
The rate begins compounding by 6% annually.
Exactly. Now, the mechanism is clever, but Section 143 also contains a crucial cultural carve-out that examiners use specifically as a distractor in complex problems.
Oh, the exemptions.
Yes. The law explicitly taxes fermented liquors, regardless of whether they are manufactured in a massive industrial brewery or, a boutique microbrewery. But there is a specific exemption.
Tuba, Basie, Tapui, and similar local traditional fermented liquors. They are completely exempted from this tax schedule.
The intent here is macroeconomic protection. These are highly localized agricultural byproducts deeply tied to indigenous traditions.
Right, taxing them at the industrial rate would just obliterate the small-scale farmers who produce them.
Exactly. So for the exam, picture a multi-step computation problem detailing a beverage company's various product lines.
Oh, I've seen these. They list like 1,000-liter batches of lager beer, pale ale.
And then they quietly slip in a line item for 500 liters of tuba.
If you calculate an excise tax on the tuba, you fail the problem.
You fail the problem. The examiner put it there as a tripwire to see if you understand the cultural exemptions built into the code.
So if you see tuba on the exam, zero out the excise tax.
Zero it out. The examiners are constantly testing if you recognize when the normal rules stop applying. And this transitions perfectly into our final category of analysis.
Which is what happens when taxpayers deliberately break the rules.
Yes. We mentioned earlier that when a company launches a new brand of alcohol, the official BIR supermarket survey hasn't happened yet.
Right, they can't survey a product that isn't on the shelf.
So the manufacturer pays their initial taxes based on a suggested net retail price that they report themselves.
And obviously, the temptation there is to suggest an artificially low price to shrink the tax base.
Exactly. Section 141 prevents this by installing a massive financial tripwire known as the 15% rule.
The understatement of suggested net retail price rule. Let's dig into that.
The law states that if a manufacturer understates their suggested net retail price by 15% or more of the actual net retail price discovered during the official survey,
they trigger a punitive penalty mechanism.
Yes. Let's put hard numbers to this tripwire to really understand the damage.
Okay, suppose you launch a new vodka and report a suggested net retail price of 800 pesos.
Right. And then 6 months later, the BIR conducts their supermarket survey and finds the actual net retail price on the shelf is 1,000 pesos.
Okay, so you understated the price by 200 pesos. That is a 20% understatement, meaning you've decisively crossed that 15% threshold.
And the financial consequence is catastrophic. The law dictates you are liable for an additional excise tax equivalent to the unpaid tax due, plus the entire absolute difference between your fake suggested price and the actual price.
Wait, really? So you don't just quietly pay the missing tax different.
No, you pay the tax due plus that entire 200 peso price gap as an outright penalty.
Wow, that fundamentally destroys the profit margin of the product.
Completely. And that is purely the administrative tax penalty. We haven't even touched the corporate liability.
Oh, right, because if the violation of any of these alcohol excise sections is committed by a corporation, an association, or a partnership,
The entity is to fine treble the amount of deficiency taxes, surcharges, and interest.
treble means 3 times the total calculated deficiency. I mean, a standard tax adjustment might hurt a company's quarterly earnings, but a treble damage penalty can bankrupt them.
Absolutely. And the corporate veil does not protect the individuals running the scheme.
Right. Section 254 imposes personal criminal liability on the officers, directors, or partners who willfully aided in the evasion.
And there is a specific demographic detail here that is a favorite for crossover questions, bridging taxation, and business law.
The treatment of foreign nationals.
Yes. If the corporate officer or partner orchestrating the evasion is an alien, a non-citizen of the Philippines, the penalty escalates beyond fines and local imprisonment.
The law states the alien offender shall be deported immediately after serving their sentence. And, the phrasing in the code is what really catches test takers off guard.
Because the statute explicitly says this happens without further proceedings for deportation.
Without further proceedings.
The Bureau of Immigration is not required to hold a separate tribunal or hear an appeal.
Because the state views tax evasion on heavily regulated sin products as a severe breach of national sovereignty.
Exactly. The tax conviction itself acts as the deportation order, swift, unappealable consequence.
It is a ruthless enforcement mechanism, which is exactly why it makes for such a compelling board exam question.
It really does.
Well, we have covered a tremendous amount of highly technical ground today. To ensure you are fully armed for the CPA board exam, let's consolidate this into a rapid-fire, 4-point exam day checklist.
Number 1, the distilled spirits hybrid trap. Remember that spirits face a 22% ad valorem tax based on the net retail price, which strictly excludes VAT and excise tax.
Plus a specific flat tax based on the mathematically rigid proof leader.
Right. Number 2, the escalator timelines. Do not apply the 6% compounding rule universally.
Wines triggered their automatic 6% annual increase back in 2021. But distilled spirits and fermented liquors hit the end of their fixed schedules and activate their 6% escalators in 2025.
Number 3, the logistics of filing deadlines. Manufacturers of wines and fermented liquors must file their sworn volume statements within the first 5 days of every month.
But distilled spirits, hampered by the slow turnover of aging casks, have until the first 5 days of every third month. Monthly for the fast movers, quarterly for the aging spirits.
And finally, number 4, the cultural exemptions. Tuba, Basi, and Tapui are deliberately carved out of the fermented liquor tax net to protect local agriculture.
If you see them in a computational problem, zero out their excise tax immediately.
Before we wrap up, as you continue your review, I want you to consider the broader implications of the automatic escalator mechanism we analyzed today.
Yeah, the autopilot tax.
Exactly. We've seen how this autopilot compounding tax works for alcohol, ensuring government revenues outpace inflation without the need for new legislation.
It fundamentally changes how taxation functions. We're basically watching a tax rate operate totally independently of politicians.
And as governments worldwide struggle with rising inflation and shrinking budgets, how long until this exact same self-increasing tax mechanism is aggressively applied to other behaviors they want to control?
Imagine an automatic compounding excise tax applied to industrial carbon footprints, mass market refined sugar, or, even digital screen time and data usage.
Once a government realizes they can engineer a tax that grows itself forever, that structural blueprint will inevitably spread far beyond just the alcohol industry.
It is a fascinating, slightly terrifying glimpse into the future of fiscal policy. Well, to you, our listener, mastering these specific timelines, escalators, and enforcement traps is what separates a good student from a future CPA.
Just keep breaking down the mechanics of the law.
Trust the depth of your review process and go conquer that board exam. We will catch you on the next deep dive.